Hey everyone, welcome back to Corporate Decoder, the place where we make sense of all the corporate mumbo jumbo, and this SEC filing smells like growth. Perimeter Solutions just dropped their proxy statement and we are diving in. We're going to unpack everything from who's on the board to how the executives get paid and even their commitment to saving the planet. What we are really after is figuring out what it all means for the shareholders. First off, the annual meeting is scheduled for May 29, 2025. If you want your voice heard, make sure to vote your shares, no matter how big or small your investment. The board is recommending that you vote for their director picks, approve their executive pay plan, and give the thumbs up to their accounting firm. Now let's get to the good stuff, the money. Total sales jumped a whopping 74%, reaching $561 million. The fire safety division, that's where they make the fire retardant, really took off with a 93% increase in sales. But hold on, the report also shows a net loss of almost $6 million, which translates to a loss of 4 cents per share. That looks bad, however. Adjusted earnings per share paints a better picture with a profit of $1,011. Adjusted EBITDA, or earnings before interest, taxes, depreciation, and amortization, which is often used as a measure of operating profitability, nearly tripled, jumping 19% to $208.3 million. Had fire safety division, that's where they make the fire retardant, really took off with a 19.3% increase in sales. But hold on, the report also shows a net loss of almost $6 million, which translates to a loss of 4 cents per share. That looks bad, however. Adjusted earnings per share paints a better picture with a profit of $1.11. Adjusted EBITDA, or earnings before interest, taxes. Time to talk about the folks in charge. The board is made up of a mix of people with some new faces and some familiar ones. It looks like they are prioritizing independent voices, which is generally seen as a good thing for shareholders. Independent directors are supposed to be objective, which means making decisions that benefit the company and all its owners, not just the insiders. The board has committees that oversee different things, like making sure the money is being accounted for correctly with the audit committee, deciding how much the executives get paid with the compensation committee, and thinking about who should be on the board and what the company's value should be with the compensation committee, and thinking about who should be on the board and what the company's value should be with the nominating and corporate governance committee. Okay, here's where things get a little interesting. The EverArc founder entity, which is basically a group of insiders, including some directors and the CEO, gets paid for providing advice. It's a pretty sweet deal. They get a fixed amount of shares and they could also get a variable amount depending on how well the stock does. Last year alone, this group received shares worth over $30 million. So while the company is posting losses, certain insiders are getting very well compensated. The company highlights how they are managing risks, particularly cybersecurity. They say they have teams and procedures to prevent attacks and protect data. I'm not sure I buy this line. Who admits that they are at risk in a report. It feels a bit surface level. This section might actually show how seriously the board considers external threats like hackers, supply chain issues, economic downturns, and climate change. Now we can look at some of the non-GAAP numbers. You see, companies sometimes use financial numbers that aren't exactly by the book. These non-GAAP numbers, which means not generally accepted accounting principles, can give a different view of how the company is doing by excluding certain expenses and charges, but they should always be viewed with a healthy dose of skepticism. Adjusted EBITDA, as a reminder, means earnings before interest, taxes, depreciation, and amortization. It's a way to look at the company's core profitability without all the accounting baggage. You want to see this number going up. They also highlight adjusted earnings per share. This takes the adjusted net income from the previous section and divides it by the number of shares to give you a sense of profit per share. Just be careful, because while the regular GAAP numbers give you the official view, these adjusted numbers are often how companies prefer to measure themselves. Executive pay. This is what a lot of shareholders really care about. The goal of their pay philosophy is to reward based on financial goals and to align compensation with the interest of the stockholders and the value they provide. They look at what other companies in the same space are paying their executives. Let's see how it worked out. The CEO, Haitham Khouri, has a target annual bonus of 100% of his salary. The CFO, Kyle Sable, gets 50% and so on. Also, 75% of their potential bonuses is from company success, as measured by achieving certain adjusted EBITDA goals. The remaining 25% is assessed from what was determined to be their individual performances, which were designed to align to key business value strategies. That means if the company does well and they do their jobs well, they get a bigger check. But how do the actual bonuses work out? Turns out those executives exceeded their goal with final bonuses at 107%. The other officers ranged between 38% and 53%. Let's see who really owns this company and what are the stakes. Windacre Partnership Master Fund is the biggest shareholder with 14.5%. Then we have the usual big investment groups like BlackRock and Vanguard. But what about the people running the show? The CEO, Mr. Corey, has a 1.6% stake, and the board and executive team as a whole control about 10%. This shows that their ownership is pretty diverse. Okay, now for my take on Perimeter Solutions, the thing is that this report shows a company in transition. They're growing fast, especially in their fire safety business, and they're trying to convince you that they're responsible in how they do it, but they're still losing money and they're paying insiders handsomely, which feels a bit off. I like the growth, but want to see those profits catch up. On the plus side, their long-term value is probably there. They're in a business literally fighting fires, which only gets more important as the world warms. If they can keep growing, manage costs, and convince investors that they're sharing the wealth fairly, then Perimeter Solutions has serious potential. But for now, I would keep an eye on those losses and insider deals. Thanks for watching. If you found that interesting, hit the like button and subscribe for more corporate deep dives and analyses. Tell me in the comments what SEC filing I should look at next.